Yeah, I know the start of our show says tomorrow's profits today, and you might be wondering where are the profits. But, well, that's the nature of the markets right now. We are, welcome to Countdown. My name is Neeraj Shah, and it's not looking good. In fact, for the Bank Nifty, it's looking ominous. But let me quickly take you through all that's happening. Look at this. The Bank Nifty is down about 15.5 to 16% in the session, 3,200 points. The Sensex has lost about 3,450 odd points, and the Nifty Bank over 1,000, and the Nifty over 1,000 odd points. So it's looking very, very skittish right now from a long-term investor perspective, or from a long-only investor. Just very quickly, the volumes before I move over to the heat map, and this is what the volumes are looking at, very thin. We have actually fallen today on extremely thin volumes. Even the FNO volumes at 3.43 on the 1 hour, this will be sub 5 lakh crore or maybe 5.5 lakh crore. I doubt the cash market volumes would go northwards of 40,000 as well. So we are falling on not necessarily very high volumes in the session today. Heat map, and most, if not all, stocks in the red. Okay, all stocks in the red. Axis Bank is a 26% drop. I don't think I've seen Axis Bank fall 26% ever. This is the worst single day fall. I think the worst single day fall for Bajaj Finance, probably the worst single day fall for Bajaj Finserv as well. Maybe ICICI Bank has had a fall like this in the past because it's got a few issues in the past as well. But just look at the corrections that we're seeing. RIL is down about 12.5%. Kotak Bank is down 13%. Maruti is down another 15%. HDFC Bank double-digit falls yet again. Devina, I can go on and on. You might as well come in because on the large caps at least, everything is looking like, I mean, it's looking like a mid-cap index chart. Really doesn't look like this doesn't look like the chart of the top 50 companies of India.
So if this is looking like the mid-cap chart, you can actually imagine what the actual mid-cap chart looks like.
It's looking very weak, I'm sure.
Yeah, the mid-cap and the small cap indices, both in line with what the rest of the market is doing, is down heavily. So about 13% under for the mid-cap 100. The Nifty small cap 100 is also trading lower by about 13%. Let's me quickly run you through some of the key movers then. And you have one stock that's managed to perch itself in the green in a falling market like this, and that is Prestigious States. Not to say that Ipca Laboratories actually has moved from being in the green by 15%, now moved into the red by 3%. So that's a big intraday gyration that's coming for Ipca Lab. Alchem Laboratories, Syngene International. So at the top end, you've still got a few pharma names. At the bottom end, you've got Mahindra & Mahindra Finserv, which is down 28%. Max Financial Services down 27%. 25% for Cholamandalam Investment. Federal Bank down 23%. City Union Bank down 20%. It's the banks and financials all the way. That is the area where much of the pain is coming in from. That's leading this carnage on the downside. For the small cap index, we've got this is a 5-day chart. So today's chart will look much different. However, in the last 5 days, the index has been down about 23 odd percent. But even from that standpoint, it's going to be mainly the smaller names, the NBFCs that are leading the drag on the downside, the likes of Ujjivan and Equitas. All of these names have been down and out. But even on the futures and options side, it looks like a weaker day of trade. But as you saw and as Neeraj highlighted, it's coming on the back of very thin volumes. Let me bring in our experts on the show then. Brijesh Bhatia, research head at Deal Money Securities, is joining us. Along with him, Hemen Kapadia of KR Choksi is also here with us. I'll start off first with you, Hemen. A quick take on the index. It's getting that much more difficult to take a guess on where the bottom lies.
A very good afternoon to you, Devina. I guess so. You hit the nail on the head because, frankly speaking, obviously it's a once in 100-year sort of scenario. Hopefully, such things don't happen often and we recover soon. But evidently, no levels seem to be working, and every single day the Dow Jones is down 1,000 or 1,500 points, and we open gap down. So no relevance. 77, 7,800 was one level which one would have thought would have been crucial. There are supports coming in closer to 7,800, but major support below that comes in at 6,800 and 6,400. So, but frankly speaking, levels have lost their relevance for the time being.
Yeah, well, I think that's actually putting it in the correct fashion. Hemen, thanks for that. Brijesh, have levels lost meaning for you as well? Is it difficult to predict even for veterans as to what could happen tomorrow?
Yeah, good afternoon, Neeraj. Definitely a problem because if you look at the gaps and even if we are ending around 300, 400 points up and now ending on a 5% negative, we open around 8, 10% down. So which was the scenario in today's session. So I think yes, gaps have been the biggest problem in this fall, and I won't see that marking a bottom and taking a bottoming trade. It's very difficult as of now. So I think if you want to play purely momentum, I think even leveraging is also I would suggest not to take a big leverage positions overnight. Also, even if you're trading 50,000, 70,000 bucks of positions, then also you are making around loss of around 20, 25%. So I think yes, leveraging is also issue, and people are now fearing that everyday gaps has been the biggest problem in this fall, and fear is very much there on the street. So I would say stay momentum wise, and probably intraday is the best strategy as of now.
Okay, I'm guessing, Himen, that you're not looking at any specific stocks to trade, or are you?
No, Neeraj, frankly speaking, no. There are a couple of pockets of resilience, Tata Steel, Cadila Healthcare, but once again, I'm not sure if it warrants a recommendation, Neeraj, because every day there's mayhem. So no recommendation, but yeah, there are small pockets where one can see some just a semblance uh, of hope. But these are all early charts, so the daily, weekly are all in complete chaos. So small things, but I'm not sure they warrant a buy.
All right. Maybe not even recommendations, but setups, Heyman, for that matter. Stocks which have, shown some grit in this downfall, likes of Pidilite, Britannia, Asian Paints. On a monthly basis, they've still not corrected as much. They've probably down about in single digits. Do these relatively look better off?
Well, frankly speaking, Devina, that Asian Paint that you mentioned is, I think, top of the pops. Frankly speaking, we are in a 35-year uptrend, and I've mentioned this earlier on BloombergQuint also. Devina. Asian Paints and some of these stocks, Pidilite and probably PNG or maybe some of these stocks, the normal or maybe the Bajaj twins now, the normal principles of technical analysis don't apply to them. But yes, having said that, what you mentioned is absolutely perfect because yes, they are relatively better. They haven't gone down like the rest of the market. A very simple way, I'll just take 30 seconds, Evina. Very simple way to look at it is obviously the market has broken yesterday's low. The Bank Nifty has, the Nifty has. And which stocks haven't done that? I think the one that you just mentioned, Devina. I think Asian Paints has broken yesterday's low, but not day before yesterday's low. And Hindustan Unilever hasn't breached yesterday's low. So there are some minor pockets of, like you say, coming to setups. I believe if the markets do improve at some point in time, I think if I were to play it, I think a Reliance Industries and a State Bank, pure technical setups, it looks like a step formation. So I think that would be an interesting play once things stabilize. But the VIX at 73 doesn't hold out hope.
Yep, the VIX at 73 and still not reached its all-time highs there of about 85 during the global financial crisis. Let's talk a little bit more, Brijesh, on some of these other names like Larsen & Toubro, which is halved right now. Do you see any sort of a respite, any side of a bottom being formed here? Not even a bottom for that matter. Is there a possibility that any of these stocks which have been heavily sold into could actually see a short squeeze from the F&O side that could lend some support to the prices?
Then I would stick with the FMCG if in case I want to really play a reversal because this is the one sector which haven't seen compared to other sector haven't seen a big downside in the likes of HUL, in the likes of Dabur, and even if you look at the I would say the second play would be the Bata and all those consumable play. These are the stocks which haven't taken a major hit the other stocks or other indices have taken. So I would, in case I would play a reversal bet or see a good upside momentum, I think HUL and Dabur would be the two stocks. I would take a longer bet because if I just look at the HUL, I guess around 20 was the high, around 15% down. If I look at the Dabur, it was a high of around 520, around 20% down. But if I just look at the HDFC, if I just look at the Reliance, if I look at the ICICI Bank, Axis Bank, they are nearly more than 30-40% down from their higher levels. Even if you look at the Reliance is around 40-45% now. So I think if I want to really play a bet on the reversal side, indicating that in case market take around 10-15% reversal from current point of time on a short covering rally, I would play HUL, Dabur and Bata on the longer side and look for around 15-20% on the upside.
Okay. Well, viewers, I hope this is just a plea that everybody who's watching this broadcast right now is indeed watching us from home and not from your workplaces. If you can, just stay home and stay safe. It's a message that we'll be constantly repeating throughout the day today on BloombergQuint, as I'm sure other media houses would be doing the same as well. And we urge you to follow it quite diligently. As we speak, there's the falls for some of these financials are getting ominous. Bajaj Finance is now down 20.5%, 2342. And by the way, the interesting bit is that this is not dating, these levels are not dating back to some 8-9 years or 10 years. Bajaj Finance is right now at a level that it was last there in December 2018 or thereabouts. It just shows the way in which the stock went up in the last 18 months and how quickly it's come down as well. And that speaks volumes about the kind of losses that are happening in some of the other pockets too. Now, we'll try and get in a couple of corporate phoners going in just moments from now. I think it'll be interesting to get in Dixon Technologies in just a moment from now to try and figure out what happens with the incentives that are being proposed for some of these names and what more needs to be done in order to help some of the mid-sized corporates as well. Just wondering, since just before we get in Dixon Technologies, Himen, this set of names, the electrical goods manufacturers, back-end manufacturers, newer companies like Polycab, etc., and all of that. So I'm mixing the whole bunch. Polycab, KAI cables, then a Symphony, Voltas, Blue Star, Whirlpool, and then Amber Enterprises, Dixon Technologies, etc. They're all kind of interlinked to each other in some fashion or the other. How do any of these? How weak do any of these stocks look?
Okay, you've thrown a whole menagerie of stocks.
Yeah, so just choose one or two, Himen.
Okay, Polycab, not much data but looks weak. Dixon relatively strong, but Polycab distinctly looks weak, Neeraj.
Okay, so I heard you said Polycab not much data but looks weak, and Dixon Technologies also looks weak.
No, Dixon looks relatively better in the sense it's gone down, but Polycab has fallen off a cliff and there doesn't seem to be too much of respite. So Dixon relatively better, Polycab despite limited data weak.
Okay. Well, Dixon Tech is the one that we are wanting to focus on. It's down about 9.5%, but that's, as I said, large cap Nifty names are down 20%, so this is relatively doing okay. And the fundamental piece of news is the government on Saturday has
approved
announced production link incentives worth 40,995 crore rupees for electronic manufacturing companies with an aim to boost production in India. This, the government hopes, will make India the hub of electronic manufacturing and medical electronics. So just how much of an impact would this have, and what's the current impact right now on business and supply chains? Let's get in Atul Lal. He's Managing Director of Dixon Technologies. The last two times that we've spoken to Mr. Lal, he's called a spade and said it as is. So Mr. Lal, good having you. Thanks for joining in. Just before we get to the impact of this move, and would want your thoughts there too, just wondering what's happening with the supply chain right now. You are the back-end manufacturer. You would be the pulse of what will happen to the front end of the consumer durables industry in India. How is it looking right now?
You see, as far as the availability of the inputs and the components from China are concerned, that has streamlined. So production restored to normalcy starting 15th, 16th of March. However, now we are in a lockdown mode. So from yesterday onwards, we have shut down our plants, both in Noida and Dehradun. The Tirupati campus is running, but I don't know how long it can run because the borders are being sealed and there are some interstate movements of inputs.
I understand that, Mr. Lal. So that is a separate point. I mean, that will rectified when it does. But the supply chain effect of stuff coming in from China, etc., is no longer a problem for you. You're saying?
Yeah, that was normal.
Okay. Mr. Lal, this obviously is a function of, obviously now we've got a date till 31st of March, till when lockdown has to be adhered to in all of those 75 districts. But can you pinpoint any financial damage, rough estimate?
Our teams are working on those numbers. So it's slightly early to share those numbers as of now. Yeah, but we are working on what final picture, as far as the financial numbers is concerned, would emerge. And there'll be more clarity in a couple of days' time.
Okay. Mr. Lal, let's come to the cabinet-approved scheme now to make India the electronic manufacturing hub. How big is this a kicker for the industry?
So I feel it's a very, very significant step. I think it's a huge thing for both the mobile manufacturing, and India is going to emerge as a global manufacturing hub, both for servicing the domestic market as well as the global requirements. And the second, it gives a significant flip even to the component ecosystem in India. Thirdly, I think one of the major objectives of this scheme is to create domestic champions. Because if you go through the scheme, there is a tilt towards that particular thing. So we are very excited about it. We are evaluating the scheme, and whatever we have been able to grasp and understand by going through the fine print of the scheme, we are indeed very excited about it.
You can participate in this by setting up additional units? Are you looking at that?
That's what we're looking at. That.
Any base case assumption as to how many units you would like to put in place, or the quantum of funds that you would like to deploy to make sure that you get one or two or how many other manufacturing units up to scale?
So we are putting our scenario planning in place. First cut, what I can share with you is we are evaluating for a possible expansion of our capacities in mobile manufacturing. That looks to be most exciting in Dixon's case. However, other opportunities also we'll deep dive into it and see what can be done. Once the plans are ready, once we have talked to our existing customers and also the new potential customers, we'll see what financial and capital allocations have to be done and how much we can support through our internal accruals, because Dixon generates free cash even after CapExes, and how much fundraising we'll have to do, either through the leveraging position or equity raise position. So those number crunching is still on the way.
Just want your view on this, where, if this scheme is looking to extend an incentive of 4 to 6% on incremental sales of goods manufactured in India under the target segments to eligible companies for 5 years, domestic value addition for mobile phones is expected to witness a 30 to 40% jump in the next 5 years to come. That's going to be will it be in line with what your assumptions are as well?
So we also feel the same way, that one, there will be an increased manufacturing of mobile phones in India. And second, through the phased manufacturing program, which is running parallelly and which is creating a tariff arbitrage, the manufacturing is going to deepen. So the value add is going to keep on increasing.
Okay. Mr. Lal, one final question really. From the last time that we spoke until now, there was a lot of talk about how global CEOs were looking to diversify their supply chain by moving out of China as a natural course, irrespective of these incentives being given by the government. As a natural course, two countries like India, you anyways been amongst the favorites of some of these companies as well. Have any conversations happened? You've already signed two or three very large clients in the recent past. Have any other conversations happened or starting to happen?
So we are getting a significant traction. It will not be possible for me to share the names, but we are getting a significant traction in lighting, and we're also getting it in washing machine. And I'm sure with the the announcement of this production-linked scheme, specifically for mobiles, the similar thing would emerge in mobiles as well. We are fairly confident about it.
And we wish you all the best for that. Mr. Lal, thanks so much for joining in today and giving us that perspective.
Thank you.
That's Dixon Technologies, hopeful of the scheme reaping some rich dividends to them. They've done well any which ways.
You know, honestly, Neeraj, while we're being a bit short-sighted at this point, maybe a year down the line, if things come under control, we could actually see all of these kick in incrementally in a really big way for companies like Dixon Technologies.
Yeah, one certainly hopes that this gets resolved soon and things become better sooner rather than later. Let's wait and watch if that were to happen or not. Sameer Kalra, founder at Target Investing, joins us right now on the show. Sameer, thanks for joining in. Are you in your SIP mode currently, or are you right now sitting on the sidelines? I don't know if you heard Dixon Tech as well. It's been amongst the stronger names, so wanted to ask you about that too as a follow-up. What do you make of this new scheme from the cabinet?
So I think, Neeraj, first of all, the scheme is, let's say, rightly timed in the way that, all the global CEOs sitting at home will always now think that where do we diversify our supply chains? What are things we can do in the next 3 to 5 years to diversify it properly so that all these centric issues get resolved. So I think India will play a major role, and the government really picked a right point to announce both the schemes, whether it was for the pharmaceutical or the electronics. And these are the major beneficiaries right now globally, if you see it in terms of volume growth. And that's where India can attract a lot of FDI especially. So I think these are rightly timed. Now they will always be, played over 1 year or 3 year time, because again, right now you have another short-term, let's say, issue over there. So I think over long term, I think Dixon can really play it out really well, and it can be a good proxy to play out the whole supply chain diversification going forward.
Okay. Sameer, what else, are we going to be watching out for? There's really no place to hide right now. Can it be just sitting on cash? That's the best advice to be given. I mean, you can be candid about it. I mean, if you want to sit on cash, just sit on cash. But, you never really can tell when you see another day where you see another circuit.
So it's very clear to me one thing that, right now, because of this lockdown, there's a lot of uncertainty in terms of, when this will get over. 31st March can be let's say, a temporary timeline to it, because India really needs to pick up the testing facilities. Over there, then you'll actually get to know. For me, I still see June end a peak out globally, because I'm more concerned on global peaking out. Right now, if you see, the mortality rates have gone up to around 4.5, 4.6 globally. And that's where these issues are creeping up. So for me, if I'm a retail investor and if I have cash right now, and even personally I hold cash right now, I've started deploying thinking that by June end, there'll be a bottom. Now, whether that bottom forms at 6,500, 5,500, or whatever levels of Nifty, I really don't want to call in that. But for me, till June, as of now, if I deploy my 30% or 40% of cash, I'll be really better off from my perspective.
Would you buy an Axis Bank at the first sign of confidence, or would it veer towards, say, maybe a Bajaj Finance, or after listening to Aditya Puri on the call, maybe you're convinced about HDFC Bank? Any of these? I mean, they are all falling as if there's no tomorrow. HDFC Bank is probably a bit more well-behaved, but Bajaj Finance and Axis Bank have really taken it on the chin today.
So let's say I've been always underweight on financials, and somehow it's been, as of today, it feels really good to be in that kind of a scenario. But if you see from here, Axis Bank at one time the book, and especially when they've raised the QIP in a large amount, I think they can withhold all these uncertainties, and somewhere or the other, forbiddance kicking in, whether it kicks in this week or next week, whenever the government announces, it'll be a relief for certain banks for sure, for a certain while. So I would prefer a Axis and a Kotak right now over a HDFC, because HDFC for me, since the start of the year and previously in November as well. For me, the management change is a big hangover, and their unsecured book is still sufficient in absolute terms rather than let's say a percentage terms, which I don't want to see.
By the way, just bring up the currency and the bond yields. I think the yields are okay, but the rupee would be an interesting one. 76, so it's not worsened considerably from where we started off. But yeah, this is record lows any which ways. And I think the bond yields at 6.27 or 28 if I'm not wrong. 6.28, yeah. So there too, the yields actually just pushed back a little bit from the levels that they were at the start of the trading day. So that's as far as the macro view goes, or the other indices go. Are you buying any of these IT names, Samir Kalra? Whether or not you were bullish in the past is one thing, but these are cash generating machines, and I think there is no question mark about the ability of the management or the balance sheet. So is this price fall a good enough incentive to initiate fresh investments into any of these, or would you wait for the bid?
I think for me, out of the whole pack right now, HCL Tech looks a bit, let's say, favorable. Because if I see Infosys and TCS, if you see US banks who are the biggest client of, let's say, TCS and Infosys, at least in terms of cash flow generation and revenue generation, they are facing a severe liquidity issue. And I really don't think they'll do a lot of IT spending in the next 12 to 18 months. So I'd rather stay away from it. HCL Tech has acquired a lot of good portfolio, and diversification of the clientele is much higher in HCL Tech. But I'll still sit on the sidelines as far as IT is concerned, because there seems to be more global impact on the spendings, even if we recover from this COVID downturn. But I think IT spending will take a backseat even when the reversal starts coming. So I will look more on the upside when it comes rather than on finding a bottom out here.
Okay. Hemin, what's your take on some of these IT names? HCL Tech, TCS, Infosys?
Well, TCS they've been almost 1.5 years between 1785, 2280, and now we've given a breakdown. So on hindsight, this entire move was a distribution pattern. So notwithstanding the bounce, I don't think the worst is over. Now Infosys, on the other hand, has virtually fallen off a cliff. So that remains a weak spot, and along with HCL Tech. So TCS looks relatively better vis-a-vis HCL Tech and Infosys. But one gets the feeling that even if there's a bounce coming in, it's going to take time for this to settle out, and the bounce is going to be a recovery. Only a test of the earlier bottom and stability a few months down the line will be slightly more convincing in terms of a possible turnaround there.
Okay. A few other names then, and now Axis Bank is down 27%, IndusInd Bank's down 23%, Bajaj Finance 22%, Bajaj Finserv 22%. So there's a lot of pain across the board. The breadth of the market is extremely negative. 74 stocks advancing versus 1489 stocks that are trading in the red. So extremely poor market breadth. Want to take a look at what's happening in Europe as well to see how the European indices have opened shop. Remember, Dow futures, S&P futures were any which ways lower by about 4.5%. FTSE 100 opens low by 4.25%. We're down about 3.8% on CAC, and DAX trades low by about 4.25%. That's the Dow futures, down about 3.5%. S&P futures should be somewhere around similar values. From the broader market space, Max Financial and M&M Financial is down about almost 30%.
Wow.
Cholamandalam Finance is down about 26%. Equitas is down 25%. Federal Bank 24%. NIT Tech, I can just go on.
Yeah, this has to be a combination of things, right? I mean, Aditya Puri saying that some forbearance is required, rate cuts, etc. is one thing. But I wonder if the street factors in some moratoriums to EMIs, bad loans spiking a bit, book values coming off a bit, and therefore the price to adjusted books don't hold any value right now. The one way of looking at it, as I think as Ramdev was saying in the interaction or somebody else was saying, was that the next 2 years are not normal, and therefore don't price these stocks for what the price to book for the next 2 years would be. try and price them for a normalized year, which could, if doesn't happen in FY22, could happen in FY23 or FY24. And do people have that kind of a time horizon? And then therefore, do these stocks appear to be as good? Now, the other very interesting point that he made was that this is not, what will happen first is not that the markets will move on to the next bull run immediately and the leader of that bull run will be different than the past. First, the markets will reset.
Stabilize, yeah.
Yeah, and in that stability period, some of these stocks that have taken a big knock could actually be the ones that could bounce back as well. So it'd be interesting to see if indeed that happens, Divya.
Yep, and we're all waiting with bated breath to see when that happens. But in the meantime, India's largest bank, the State Bank of India, has decided to open a special credit facility to help small and medium businesses tied over the business impact due to COVID-19 outbreak. To understand more about this facility and how it will have an impact both on the bank as well as the customers, we're joined by Mr. P.K. Gupta. He's the Managing Director at State Bank of India. So thanks very much for taking out the time. In 200 crores, you're going to be providing funding up to 200 crores till 30th of June. Is that the kind of the quantum which you feel is going to be enough right now to service any kind of dislocation in the system from the small and medium enterprises?
Yeah, thank you. See, this is basically a preliminary measure that we have announced actually. Okay, so what we are saying basically in this facility is that anybody who has working capital facilities from the bank, so up to 10% of that limit can be made available as a emergency funding facility, subject to a maximum of 200 crore for one customer. Okay, so basically any customer who enjoys limits above 2,000 crore, for that this limit is limited to 200 crores. So we do believe that a lot of people who have cash flow mismatches are not able to service their liabilities in time. So this can go a long way in taking care of some of that stress that they could be facing. I do believe that Reserve Bank of India and Government of India are also looking at various relief measures. Hopefully they will get announced sometime very soon. But this we thought was a beginning that we could make actually and make this facility available to the customers, and it will take care of their temporary cash flow mismatches that they could have. Just to illustrate further on this facility is that it's a 12-month facility. There's a 6-month moratorium, and after that it gets repaid in 6 monthly installments. So we believe that at this point of time, as an immediate measure, this should be good enough for most of our corporates.
Right. So just to understand a little bit more, this, if at all there is, these mismatches that you're talking about, will this additional facility that has been undertaken be classified as a restructuring? Would you be providing for the same?
No, I don't think that this will be classified as restructuring. This is an additional funding facility. This is again available only to the accounts which are fully regular or maximum of SMA 0 actually. So SMA 1 and SMA 2 accounts who are actually facing some bit of a stress, for them right now this facility is not there actually.
Okay, so someone who is not being able to repay their current obligations cannot extend themselves to this fund.
Yeah, so right now this is only for standard accounts actually, so it won't be called restructuring. As I said, as it is, for borrowers which have limits up to 25 crores, for that restructuring facility is available as it is, which RBI announced a few days back, and those accounts can be restructured up to 31st of December. So that will be more in the form of restructuring, not additional facilities. But I do hope that, people who are facing bigger stress actually, the accounts which are already, say, SMA 2, for which if we were to provide any additional facility could amount to restructuring, I think for that some help has to come from RBI or from the government. Actually.
So has SBI, sought forbearance from the RBI for specific loans of this category?
Not for this, but I think otherwise IBA, some discussions have been going on. I think IBA has already taken up with the RBI for providing some kind of a forbearance to the accounts who are facing temporary liquidity mismatches.
All right. So what happens in this period where, you see incremental stress from a few specific accounts, and they may not be accounts to the size of just 25 crores, they may be slightly larger accounts. In that case, do you see them moving into NPA?
They could actually. I think the way situation is evolving, I think definitely there could be some challenges people will face in their ability to realize their cash flows actually. So that is where I think we need some help from the Reserve Bank of India. I think they are the only competent to take call on that. So let us hope that something happens there actually.
But are you seeing any stresses, any significant stresses in the system?
See, it's just a few days. I think it's too early to take a call on that. Most of the time, the repayments or the interest servicing, it falls due at the end of the month actually. I think so this week, is something that we will be watching very carefully and seeing how it pans out.
Mr. Gupta, good afternoon. Most of the corporates that we are speaking to saying that they would expect some bit of relief extended by their bankers to them, some bit of hand-holding, so on and so forth. What is it that you believe both corporates and lenders like SBI can do together? What is it that you would be willing to do to help out your borrowers?
As I said, that as a bank, I think we have always been proactive. We have been trying to do our best actually and try as much help as is possible. So this was the first step that we have taken. But I think some more steps for that, you will need some kind of a regulatory forbearance. I think that is what we are waiting for. And hopefully something should happen soon.
About this, sir, that IB has taken this up with the Reserve Bank of India. Is there a sense about by when would a decision around this, either a yes or a no, or the extent come out?
I think we need to wait and watch, actually. I don't think I'll be able to say anything on that.
Okay. Fair call. One more question, sir. You mentioned about how you've taken up measures for certain the starting measures, and then some more will be announced. Would these be separate for SMEs versus large companies, for exporters and importers versus domestic companies? Any sense that you could give us? I believe there were some measures announced
I think at this point of time, I think probably most of the sectors are getting stress actually. Okay, if particular sector is facing stress, I think it doesn't matter whether the company is in MSME or a large corporate actually. I think both of them probably need equal amount of handholding, equal amount of support probably is required to both of them. So hopefully whatever the regulators announce will probably be applicable both for the MSMEs as well as for the larger corporates.
So just one last question. Do you also, we heard Mr. Aditya Puri saying that there should be an out-of-policy rate decision at some point. Do you also concur with that? Do you feel that there should be a big policy decision that should come about?
I think if you look at it, what has happened globally, I think most of the economies, some kind of interest rate reduction has happened. Most of the central banks have done something. So I think it's a fair ask. If you ask me, for most of the corporates, people have been asking for it. RBI has taken certain measures which have kept the interest rates in check, which has actually, RBI has ensured enough liquidity. So, but yes, from the corporate side, there is some expectation in terms of interest rates relief also. And again, I think we need to wait and what steps RBI takes there actually.
Right. Just one last question, Mr. Gupta. In terms of making additional lendings, are you tightening, the noose a little bit on the kind of accounts you lend to and the kind of on the quality of lending that you have right now, even in such times when the need for cash from a customer may be at the higher end, but you will take a refrained approach?
No, as of now, no, I don't think there is any change in the lending policies. See, but what is more important right now, I think, is that, not only this relief that we are doing, I think keeping our branches open, keeping our ATMs running itself is becoming a big challenge. As you know, that the lockdowns have been announced in so many districts. States across the country also, many states have actually announced a complete lockdown also. So how do we get our staff to the branches? How do we even keep the normal basic banking operations running is becoming a bigger challenge, I think, at this point of time. And that is something which we are grappling with even much more than keeping these accounts standard, actually. So, given the fact that, you're not able to even travel, the restrictions on transport, all those restrictions are there. So keeping the operations running itself is a bigger challenge as of now.
Mr. Gupta, just before we wrap up, there's a lot of questions in the minds of everybody, as you would understand also, about what could happen to book, what could happen to asset quality over the next 2 or 3 or 4 quarters. And how much is the book exposed to stressed versus non-stressed accounts? I think your peers are coming out and talking about various numbers. What about SBI, sir? Two suspect accounts, 2 stressed accounts compared to the other normal books, etc. as this thing stands.
See, again, too early to give numbers. If you look at only in terms of stress sectors, okay, if you look at the stress sectors are more in terms of hospitality, aviation, and, related sectors. So their exposure is not much actually. But ultimately, the follow-on impact of this, what comes on the other sectors, that is, I think, something we still need to watch out the situation. I don't think that we have compiled numbers. It's too early for that, I think.
Any impact on the resolutions that you were expecting, sir? And do any of those get impacted?
Might get delayed a little bit because many of the courts are not functioning. So those kind of things actually would lead to certain delays. People are not able to travel right now. Bank staff is able to travel because they have been exempted actually from all the curfews and restrictions that have been placed on travel. So a lot of other staff, if they are not able to travel, so obviously there could be some delays in most of these resolutions also.
Mr. Gupta, thank you so much, and I hope this turns out better than what people fear. Thank you so much for taking the time out and speaking to us.
Okay, thank you.
That's PK Gupta, MD of State Bank of India. Too early to say for them, he's saying, as of now. But yeah, some measures have been taken to aid corporates. Some more might be taken. The important thing is IBA has made a representation to RBI for forbearance. And well, wait and watch is what he mentioned as to when does this announcement about coming about. But I think twice in today, one of the largest private sector banks, the largest bank in India, which is SBI, both of them have spoken about this forbearance. Let's wait and watch how it shapes up. By the way, as we speak, the market doesn't seem to be in any mood to grant banks any kind of leeway. Just look at Axis Bank. I don't remember the last time I saw any private sector bank correct 29%. A large private sector bank correct 29%. Forget Axis. I'm sure this is the steepest fall in history for Axis. But I don't remember the last time that I saw a private sector bank correct a shave off a third of its value in a single trading session. And this is after the stock has already fallen about maybe 20, 25, 30% in the run-up to yesterday's session, or rather Monday's session, today's session. So this is really, really steep, and it just shows the kind of skittishness that the markets and investors have around this. I mean, the cash market volumes are not that high. I doubt that there are some dramatic shorts having been built up on Axis Bank too, but this is just getting clobbered one way. What kind of trading pattern, Brijesh Bhatia, do you see in an Axis Bank? This is just something, I mean, this is not something that I have seen in Axis for a really long time, if at all, ever.
Yeah, definitely, Neeraj. I guess, yes, it's the first time it has crossed around 28%. It previous was around 17.5%, if I remember. And that was, I guess, in around 2013. Since then, this is, I guess, biggest intraday fall. But yes, I think more downside can be seen because it has been broken the previous support at around 342, and the next support which holds it around 239. So I guess 240, so which is another 20%. So I guess definitely more wins for Axis Bank to complete 240, 250.
Neeraj, a month ago, if I told you that I'll give you Bajaj Finance at 2,200, would you take it?
Well, ask those QIP guys who put in money at 4,100, right? They would have happily subscribed it. This is unbelievable.
It's really unbelievable. Bajaj Finance at 20,251 and no takers. It's around 23%. How times have changed in such a short duration. 4.57 million shares been traded on Bajaj Finance. But also, guys, do remember that there's a whole lot of a difference between the kind of trading volume some of these counters have seen versus the kind of delivery volume some of these counters have seen. So in the month of March particularly, HDFC has rather seen more in terms of delivery volume, while an IndusInd Bank has seen more in terms of trading activity. The delivery volume is not too much so in an IndusInd Bank, but goes to see the kind of F&O activity that some of these stocks have also seen. Hemant, are you expecting a short squeeze at any time, in the upcoming few days at all? Because the system seems to be, a bit burdened with the kind of shorts that are there.
Yes, but the way the levels are breaking, Devina, one would have thought that this would have happened sometime back. We're at 7,600 now. Going back just a bit, 10,600, 10,000, 94, 8,800, 83, 77. I mean, levels where one would have thought, and some of these are multi-year levels, Devina. I mean, they've been there over the last few years, not recently also. So I believe, yes, when? I am not going to hazard that guess because even now we are tanking. So yes, sometime it's going to happen. It'll happen pretty strong, but will there anything be left to squeeze after this? Hypothetically.
Right. We are now at 13.5% under for Nifty 50. That's 7,587. Well, if this was before 1 p.m., we would have been a bit worried because then you would have, approached your 15% circuit breaker limit. But now we're just about 15 minutes away from market closing. So even if we do hit 15%, we don't halt trading. You go all the way. You take it down all the way till 3:30. 1,156 points given up. I just want to look at the MRR function of the index as well. I don't think we're going to spot anything new on it other than what we've already spoken about, that it's just the financials and the bank nifty, which is down 17.2%, which is causing this kind of a bleed on the index, 3,400 points. It's almost as if we're going back down to levels or highs that we saw in January 2008 before the GFC. That was 6,300, and it looks like it that we're kind of approaching those levels as well. I hope we don't get there, but it seems like a very precarious position.
Yeah, we are lower than the budget lows for sure, the other J-T budget lows. By the way, just want to see what the US futures are up to as well, because this is getting ominous. And while we mark Europe, important to bring up what the Dow futures are doing, not too much. So, the Indian markets are actually falling at a faster clip than what the US futures are, because the US futures were down 4.8% in the morning when we started trade. We didn't anticipate such a bad day for banks, but clearly this is something that is getting disrupted in a meaningful way. So there is fear. This is fear at and it almost seems like a capitulation phase, but it may not be, because you do not know when this ends. Typically, capitulation phase may last for a bit longer as well, but this is just unreal. The Dow futures are not that lower off, and still we've cracked about 17% for the Nifty Bank, 3,500 points, and 4,000 points for the Sensex, Devina.
So, the foreign institutional investors pumped in closer to 1 lakh crores in the entire year of 2019 into equities. They've already pulled out more than 50% of that in a matter of 1 month. That's a lot of money to go out of the system, and we don't know whether there's more money to get out or no. But if you go by history, when you have this kind of ferocious selling, the money that gets pumped back into the system comes back at a much faster clip than it gets pulled out. But we hope for that. We don't know whether that is going to happen, because the environment is different, the conditions that we are in is different, and this is not just a financial crisis. This is a total, health fiasco of sorts. And unless and until you don't find the health solution, the economic solution will not follow, and you will not be able to find a financial solution to it either. Nifty 50 now, 13% under.
This is looking bad. I wonder if, before we get to Sameer Kalra, I wonder if Hemen and Brijesh have closing strategies. Hemen, you started off the show saying you do not want to take a stock trade. You may well stick to that position. But let me just ask you nevertheless, do you have a stock-specific or an index-specific closing strategy?
I have a simple closing strategy, Neeraj. Close the market. People can't travel. It's dangerous. We are not essential services. Adds to the risk. Creates mayhem and chaos. Simple closing strategy. Please close the market till 31st of March.
Brijesh, till the time they are open, we'll probably have to talk about the closing strategies. Nevertheless, even if that is your view, what do you do right now on the markets while they are open?
I think I would stick with the PSU on the short side, because I think still more pain for would be continue with the PSU. So I would go short on Bank of Baroda at 54 as a STPT trade, and look for around 48, 49 in the probably 1 to 2 days.
Just want to look at Indiabulls Housing. I'm not being able to pinpoint why the stock is up 7.5% in a market that's fallen about 13%. And on 2 occasions intraday, the stock has actually gone down to levels of 81, and from there it's actually bounced back to these levels of 97. Ipca Labs itself is having quite a volatile session for itself now, back into the green, very marginal, but it's still back in the green. I think at the start of the show, it started the day in the positive. I think it was 16-17% up. Then it fell about 3% when we started the show, and now it's trying to break out into the green once again. And then you have a prestigious states which is up 1.5%.
I wonder, Devina, if this has got to do with the market-wide position limit, because India Bulls was one of the stocks in that list. Maybe Brijesh might be better place to tell us that. Brijesh, any of those 8 names which were anyways above that 50% mark on the market-wide position limit, the PVRs, India Bulls, Vodafone, etc., JSPL, any observations there, and particularly India Bulls Housing?
I think, yeah, because if you look at this, India Bulls and the covering has been seen in India Bulls because it has gone on to MB market-wide position. But I think, yes, it can post around 107, and I think back to short positions can be expected around 107, and I'm expecting back around 66 levels on the India Bulls Housing Finance. I think 81 can be breached sooner on India Bulls Housing Finance.
Okay, Samir, any thoughts here? India Bulls Housing Finance, it's up about 7%. Samir Kalra.
Maybe technical because of the rechanging of the market-wide positions. But fundamentally, if you see the corporate bond and the commercial paper market, the spreads are massively different. And whatever I can make out, there's no trade going on any kind of NBFCs. Forget about banks, forget about even the corporates. There's a total liquidity tryout, which I think from my perspective, rather than giving equities any kind of a bounce from them, if the government is really making sure and RBI really makes sure, save the commercial paper market and corporate bond market, because that is very, very important right now to be addressed rather than, equity markets, from my point of view.
Okay. Well, maybe that's the case, but right now the equity markets are getting roiled. Really, that's the expression that I would want to use at the broader end of the spectrum. I mean, just look at the damages that have happened to Hdfc Life, for example, at 342. Hdfc Life is now 15% away, and it may fall in a matter of days or otherwise, but it's just 15% away from its IPO price. This was arguably the most touted IPO in the life insurance space, and that is there. Polycab, as I understand, is already around levels which it started off its journey.
Yeah, I think it's right about the closing price of its listing day. The listing day closing price of 617, and it's just about there. It's not yet come to issue price because it ended with a 20% premium, so it's still 20% away from its issue price.
The much touted real estate story, Godrej Properties is down 20%, and Motilal Oswal announced a buyback today at 630 or 650 rupees. It's a small one, but nevertheless, and that one is down about 20% too. By the way, debt-free companies are being taken to the cleaners too. I mentioned HDFC Life, yes. Symphony, debt-free, down about 20%. So it's not looking good at all for a clutch of names. Consumption is taking a beating. Jubilant Foodworks is down about 12. I wonder what Westlife is up to. Both Jubilant and Westlife gained in trade in Friday's session on news that, maybe the restaurants might be open. But now I think reality is hitting the roofs as we speak, and therefore both of these two are correcting. Consumption, and wonder if what your thoughts be, Samir Kalra, on the QSRs, the Jubilant Foodworks and the Westlifes of the world.
I think still take away losses, book your positions, because your restaurants reopening will be the last phase when everything gets corrected. That will be the last phase when they're reopened. And even the ordering part might be, halted for certain times if we rise on. So it's always connected to the number of cases. If you see globally, countries taking a call on lockdowns and what kind of lockdowns, if the number exceeds out here to a certain level, then I think even deliveries will shut off. So I think it's better to take whatever your losses are, profits are on QSR, and let them reopen and then reinvest over there.
Would you advise the same to somebody who's been holding these counters for 6, 7, 8 years?
Actually, I would do the same, and certain levels I've done the same, because if you see right now what is happening, the QSR beating is too much, and their job forces are totally getting out of the cities and going back to their hometowns. So it's for sure, I think restaurants will be the last leg which will be reopened, before anything happens. They have a potential of shutting down the deliveries as well, because again, it's taken as a human touch right now, and the cases are right now subdued to take that call, and maybe sooner than later that call is also taken, and that totally damage at least Jubilant Foods in my purview.
Okay, and then similar will be the case with the likes of PVR, Inox, because going to theaters is going to take some time.
Yeah, maybe airlines will start quicker. And people will start traveling, but
business travel, not leisure travel.
Yeah, leisure travel will certainly. Actually, you're making a right point, and business travel might start even if leisure. Business travel might be the only one that will start, because leisure travel might still stay shut. And wonder what, just before you start wrapping up, what Interglobe Aviation and SpiceJet are doing, with Emirates saying that they might actually stop all of their flights. Wouldn't surprise if situation is similar out here too. But Interglobe Aviation has hardly fallen, and SpiceJet is down about 5%. On a lower circuit. Samir Kalra, quick 30-second view on the aviation companies.
So I think SpiceJet towards and Indigo, it is there, but wait for at least 15th April from my side, because even domestic travel is somewhere or the other. A lot of states are now requesting center to shut down domestic travel also, and if that call is taken, Singapore Airlines is now operating at 4% of capacity. Same with Lufthansa. So I don't think so anything different can happen to India, and we can maintain domestic travel at this pace. So it has to go down for a while, for a short term.
Okay, gentlemen, Samir, we'll take it. We'll let you go on that note. Thanks much for joining and giving us your thoughts. Hemay and Brijesh, stay on. We'll just take in closing thoughts from you. But here's how the markets are shutting shop. And an ominous day. I think this is the worst fall that I've seen in a really long time. Remember, on the day of the lower circuit as well, we bounced back and ended in the positive. But we're probably becoming a bit numb to it, because this doesn't shock me anymore. Previously, it would have shocked the living daylights out of me. Right now, it's not shocking in any fashion whatsoever. But yeah, banks certainly down, and the mid caps and the small caps too down. Well, Devin, I'll bring up the impressive list. I'll talk about the more sedate losers. But even those don't look sedate, because look at the fall in a Bajaj Finance has now overtaken Axis Bank as the top loser, down about 29%. Axis Bank 27%, IndusInd Bank 23%, Bajaj Finance down another 23%, and then ICICI Bank, Maruti Suzuki. Remember, auto companies have shut production, and all of these are getting clobbered. So Maruti is down about 18%. I can see an Eicher and a Bajaj Auto down here, 15%. And can you imagine that the top 20 stocks, the best performing or the least underperforming stock is BPCL or Titan, which is down 14%. That tells you the extent of damage that we're seeing into these names. Well, quite a washout today. And if this is any indication on the volumes that we've seen, it won't surprise that this might just continue. Devina, Friday too, we had a sell number of just 3,500 crores from the FIIs, but this is just not stopping.
Yeah.
What about the mid caps?
Very impressive list, Neeraj. I will highlight that for you. We've got a cut of more than 13% on the broader market space as well. As you know, the breadth of the market extremely weak. But few stocks I'd like to highlight. First off, financials, and be it in any shape and form, NBFCs, pure play banks, you've got Bajaj Finance, any of these names that you take a look at. Max Financial, that stock's been down 27%. M&M FinServes, that's down about 27% as well. So all of these names, brutal sell-offs. Chola Finance, Equitas, Shriram Transport Finance, the entire NBFC pocket very damning this afternoon. ICICI Pru, some of the insurers as well. ICICI Pru is down about 20-odd%. I actually want to also take a look at what Hdfc Life is doing and what SBI Life is doing. So while we're taking a look at general insurance, it's also important to see what life insurers are doing. 17% down for Hdfc Life, that's 344. SBI Life comes down with 13.5% knocked off. That's about to 549 on the stock. Real estate as a pocket, barring one stock, which I'll mention later, has taken it to the chin. Brigade Enterprises, for one, that's down in the session by 20%. Aside from that, Godrej Properties also looks weak. Trent, this is a stock that most have stood by from the mid-tier basket, talking about the value proposition and how the growth potential and visibility in earnings is there for this one. And the stock's down about 20-odd%. Ujjivan Financial Services, NIIT Tech, RBL Bank, Federal Bank, all of these names have been washed out in today's session. What's probably holding ground, and I was wanting to talk about Prestige Estates. That's the one that's doing okay from the real estate basket in the session this afternoon. Ipca Labs, a volatile session nonetheless, but holding steady ground. Prestige Estates, I think, closed with gains of 3.9%. Ipca Labs back in the red, so tried to push through the green, but down again 1.2%. So overall, really, the only takeaway that you have from a market like this is fear and panic selling that's come in. And this is Bank Nifty driving this sell-off, 16.5% given up. So the leadership, and not just on the upside, but the leadership on the downside. I'm going to hand over the baton to the Nifty Bank.
The Nifty Bank, yes, and in today's session, I'll add Reliance to it. Devina, if you look at the points contribution, Reliance is arguably at the top of the pile. No, HDFC Bank is, but Reliance is right up there. 106 points on the downside from Reliance Industries, stable as well.
Yeah, but that's just to say that, 300 or 400 points from the top weighted stocks. The rest of the team also pitched in.
Yeah, the rest of the team has also pitched in. This is looking extremely painful. The volume should come up. I wonder if the cash market volumes expanded too much. No, not really. Look at that.
It's extremely soft,
abysmal
actually.
volumes.
Yeah.
So hardly any participation, which just shows that there is just an absence of buying. There's just no buying happening at any levels right now. And just that whiff of selling, the FI number will likely not be very big here. It's just the absence of buying that is leading to this. Not enough positions built in the FNOEs either. Just no buyers in the market currently. Well, it is a sell. It is a buyer's market right now. And just that they don't want to come in right now. Yeah. Final thoughts from our expert. Well, Brijesh, I'll come to you first because Hemen will say that he wants the market to be shut. That's his closing comment. So let's start with you. Can you guess, Hemen? I mean, can you guess, Brijesh, looking at the charts, as to how worse can this get?
I think probably we are expecting around 71.50 to around 69.50 on the downside in this momentum, because if I just look at the fall, generally this is the fastest fall, 40%, probably 39% we had in ever in the history of Nifty or Sensex. But I think yes, if you look at the momentum, generally Nifty has, even if you look at the smallest swing moves, it generally has a tendency to move around 88.6% retracement. If I just look at the recent rally, right from around 67, the 88.6 falls around 71.50. So I think 71.50 could be the probably the bottom. I would not say the bottom at place, but probably the bottom. I think one should look at.
Hemen, I'm going to still come to you for a closing comment.
Yeah, 7% OI reduction in Nifty, 6% in Bank Nifty. You have the VIX at 72. It still seems bad and dangerous in terms of levels, if any. My 2 cents. I think 68.25, 63.39. and 7300, 3 long-term support levels, assuming some of them hold. So no sense in getting adventurous, but like Neeraj said, there's no volume, there's no buying. So it's like a bottomless pit. But I think last multiple weeks we've been getting hammered on Friday. Hopefully this weekend, or probably the new settlement from Friday itself, would be some sort of technical green shoot and some sort of recovery on the angle.
We hope so too. Hemen as well as Brijesh, thank you very much for joining us this afternoon. And to all our viewers, we cannot emphasize this enough. Please stay home. Please stay safe.
Thanks so much for watching.
According to a recent report, women today contribute nearly